Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. So what happened in the market last week? Let's take a closer look. The major global stock indices were marked by mixed performances across regions. This was a quite week for U.S. equities. The S&P 500 ended the week flat, while the Nasdaq posted a modest gain of 0.24%. Small cap stocks outperformed large caps. The Pan-European StoxX Europe 600 index ended 0.72% lower amid heightened political uncertainty in France, ahead of the snap election called by President Emmanuel Macron. Japan's stock markets rose over the week, with the Nikkei 225 gaining 2.56%, with continued weakness of the yen supporting exporter stocks. The Chinese stocks weakened amid concerns about the slowing economy. The Shanghai Composite Index and the blue-chip CSI 300 Index both recorded slight declines. The yen hovered to a 38-year lows against the USD to close at 160.6 against the USD. Despite expectations for intervention, only verbal intervention occurred. Meanwhile, the GBP ended the week almost unchanged, despite yields climbing ahead of the UK elections. Similarly, the euro ended the week flat, despite Eurozone government bond yields rising ahead of inflation prints. Oil WTI price rallied 1%, while gold price dropped 1%. The Bureau of Economic Analysis reported that the core PCE price index rose by just 0.1% in May, down from an upwardly revised 0.3% in April. This slowdown in inflation was seen as increasing the likelihood of a rate cut by the Fed in September, which was welcomed by the markets. As a consequence, short-term yields fell slightly while yields on longer-term treasuries rose over the week. This resulted in a steeper yield curve. The banking sector saw strong performance, driven by reports suggesting that the Federal Reserve might impose less stringent additional capital requirements on banks than initially expected. The yield spread between French and German debt widened ahead of France's election, while UK yields climbed ahead of their upcoming elections. Germany saw a rise in unemployment to 6% in June, the highest in over 3 years. The IFO think tank's business confidence indicator weakened, and the GfK consumer climate indicator dropped, reflecting more cautious consumer behavior and highlighting the country's economic challenges. The European Commission's economic sentiment indicator declined slightly, while consumer confidence showed marginal improvement. This mixed data indicates varying levels of optimism across different sectors within the Eurozone. In June, slower increases in fuel and food prices led to a decline in the harmonized inflation rate in France and Spain. France's annual inflation rate fell to 2.5% from 2.6%, and Spain's inflation dropped from 3.8% to 3.5%. The yield on the 10-year Japanese government bond increased to 1.06%, driven by expectations of further monetary policy tightening by the Bank of Japan. Industrial profits at large companies rose by 0.7% in May, a deceleration from April's 4% gain, reflecting sluggish consumption and ongoing deflationary pressures. Significant foreign selling of onshore shares contributed to the market's weakness. What to watch this week? As we enter the first week of July, investors are gearing up for a slew of crucial economic data releases and political events that could shape market sentiment and drive volatility. Here's what to keep an eye on. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.